With gas prices, government regulating construction companies, it makes you wonder if any industry takes responsibility for itself these days. Well, here's one that does, and it might surprise you. It's the real estate industry. Dani Babb is here to explain. Dani, by the way, the co-author of the book, Finding Foreclosures. She's also a realtor extraordinaire. Dani, what does your industry do?
Well, right now what they're doing is they're convincing sellers that their homes are not really worth what they think they're worth. We've seen in the home building industry corporations cutting prices for the last couple of years, but the homeowners are so emotionally attached to their upgraded appliances and the walls that they just painted that they've been unwilling to take a price reduction. And finally, the industry is stepping in and saying, if you don't cut the price, I either won't represent you or we're going to end the listing early, basically.
Well, it sounds like you guys are getting desperate.
Well, my colleagues, a lot of them are getting desperate. I don't represent buyers or sellers myself, but they definitely are. I mean, that right now, even if you're willing to buy a home at $500,000, that doesn't necessarily mean it's worth that, nor does it mean you're going to get the appraisal for it.
Well, I do think we have this Mexican standoff situation where a lot of sellers just cannot envision the property that they thought was worth X amount only a couple of years ago is now worth 20% less. Let's go through some examples of what we have, maybe what Dani is talking about. You can agree or disagree. But you're arguing that there's 600 homes, for example, in Florida being sold at cut-rate prices. And a lot of them, including Coldwell Banker, is taking an extra 10% off the list price. San Diego, I told you about what was happening in the break here, buy 2 homes for 1. Yep. That, to me, smacks of desperation.
Well, a lot of people are desperate. I mean, we're trying to get buyers out of the woodworks. A lot of people are concerned that I talked to that this is the last Fed rate cut. Rates may even go up next year. And that given the inventory levels and the low rate cuts, the low current interest rates, this is the last opportunity that they have this buying season.
I think they know that, Dani, and you're the expert here, but I play one on TV like I always say. But I think they know that. They can't get the damn financing.
They're very eager. True. You're absolutely right.
You know, and that's the problem. They're really interested. They want to get this home. You and I were saying during the break, they can't get it appraised. So there's a difference between what the seller thinks is the value of the house and what the appraised value is. The seller, as you said, doesn't budge.
Right.
The buyer wants to buy it. Nothing changes the appraisal, and then to add insult to injury, he or she's looking for financing, and the bank says no.
Yeah, on anything over $999,000 in most of the markets, we have 2 issues happening. First of all, the banks are requiring 2 appraisals to close the deal.
Right.
And they're taking the smaller of the 2. They're not just taking an average.
And those appraisals are being extra conservative because those guys were whiplash for being too giddy.
Right.
Now they're being too conservative.
They're too conservative. And you have to be on the bank's list of approved appraisers, not just certified to do it.
Like my cousin Fred, he's off.
You can't do your appraisal.
That was a sideline deal for him.
But
now, how does the bank decide who to use? And is the bank using people who are known to be notoriously conservative? Maybe too much so.
Yeah, there is some speculation in the market that that's happening. We don't have any proof of that, but certainly there's speculation. What banks are doing to combat that is saying, no, we're hiring legit appraisers, but we're using the declining market factor, which means we're going to take whatever the lowest appraisal is. We're going to cut 5% off the top period. So if you still want that house, you have to put an extra 5% in. And I'm dealing with that myself right now in California.
And you have to have a higher credit score, right?
And you have to have a higher credit score.
Let me ask you this. Someone was telling me, and you're a great student of real estate history, that we've been so spoiled with the way real estate's been the last 10, 15 years where you needed, they had the, no document loans and put 1% down and, 100% financing, that it was not real and that I'm older than you, but I mean, what my parents enjoyed, and that is putting 20% down, minor appreciation, single-digit appreciations, 2-3% year in and year out. That is more the norm, and we are simply returning to the norm.
Yeah. I completely agree with you, but what we're starting to see is people get really creative and use hard money financing that the lender's either unaware of or that the lender has approved in some cases to fund a deal. So if you need to have 20% down according to your bank and you only have 10, so all you've saved, that you're going to a hard money guy, essentially a loan shark, and saying, hey, I'll pay you 12% for the next 2 years until my value is up high enough that I can get a second mortgage and give you your money back.
Or mortgage brokers will find you 2 lenders, right? One to take care of the 80% nut or what, and someone else to take care of the other one, right?
Right, exactly.
But either way, you're paying through the nose.
You are. Those seconds, first of all, we're having an issue where primary lenders won't even lend to you unless the combined loan to value is 90%. So that second mortgage has to be unknown about. So they won't, they're not allowing second positions because they don't want to run into issues if the property declines.
I agree with you. It's a standoff. All right. Danny, always good seeing you. Thank you
too.
very, very
Thanks.
much.